Welcome to the Deep Dive. We're jumping straight into the latest crypto analysis from Vantage Plus, published just today, October 6, 2025. Our goal here is pretty simple. Give you the core sentiment, the key drivers, and the specific price levels to watch, especially after that sharp bounce back from the late September correction.
Yeah, and the bottom line, that pessimism from the correction, it's pretty much gone. The market mood is definitely positive now. Vantage Plus is calling this basically another bull run attempt, and it seems to be in full swing. Sentiment really turned around.
Okay, so what fueled this? I mean, what did the analysis point to? Was it just, a relief rally or something more solid?
No, definitely more solid. Externally, you had U.S. stock indices moving up, the NASDAQ especially, that helped crypto gain some ground. But the real engine, fundamentally, was Bitcoin itself hitting a new all-time high.
Right, the ATH.
Exactly. And what's really eye-opening is the institutional flow. Those U.S.-listed Bitcoin ETFs, they pulled in over $3.2 billion.
Wow, $3.2 billion in just the last week of trading.
Yeah, just the last week. That kind of institutional buying is, well, it's the main force right now. It's dragging altcoins higher too, although, altcoin accumulation isn't quite keeping pace with Bitcoin yet.
Okay, so huge institutional appetite for BTC. But that brings us to the big question mark for this week, doesn't it? The macro picture. Vantage Plus highlights that traders need to watch the U.S. jobless data unemployment, non-farm payrolls. Though there's that chance they might be delayed because of the U.S. shutdown, right?
Exactly. That's the potential wrinkle. But the source's take on the so what of this data is key. Basically, weaker numbers, if they come out, are likely good for the markets.
Weaker is good. How does that work?
Well, it signals to the Federal Reserve that maybe they can keep cutting rates, or at least pause hikes aggressively. And continued rate cuts mean more liquidity washing into the system. Plus, it could weaken the dollar, which generally acts like, well, rocket fuel for risk assets, including crypto, you see.
Got it. So, bad news for the economy might actually be good news for crypto prices because of the Fed reaction. Makes sense. All right, with that potential tailwind, let's get into the specific technicals. Where could this liquidity push prices? Starting with Bitcoin, trading around $123,400 after that new H.
Right, BTC. The technical setup looks pretty strong. Breaking a recent high like that, it usually attracts fresh buying interest. The analysis suggests the upside is reasonably open now, targeting somewhere in the $140,000 range.
140K, okay. Any caveats?
Well, yeah, there's that dependency on equities we mentioned. If the Nasdaq takes a dive, Bitcoin might just chop sideways for a bit first before trying to push higher. But the breakout potential is definitely there.
Okay. Now, Ethereum. ETH is trading at $4,538. The analysis notes it held above $3,900 during the correction, which seems like a good sign.
It is, yeah. Holding that $3,900 level was important support. For ETH, the really key level now is getting and staying above $4,800. If it breaks convincingly above $4,800, that should really boost momentum, and the targets then jump up quite a bit, potentially into the $7,000 to $8,000 range.
$7,000 to $8,000 for ETH. Interesting. Okay, but then there's XRP, trading just over $3 at $3.00089. Now, Vantage Plus says something interesting here. XRP doesn't necessarily need positive macro data to get going. How does that fit with the Fed story?
Yeah, that's XRP being XRP, right? It often dances to its own tune. The read here is that for XRP, it's much more of a pure technical setup at the moment. Forget the macro later for a second. If XRP can break decisively above the $3,200 level, that move itself could be enough to confirm a bullish trend and get things moving, regardless of jobless numbers.
So a different dynamic there. Now, we should probably mention the one where the analysis advises a bit more caution.
Yeah.
Solana, SOL. Trading at $231.55. Everything else seems pretty bullish. Why the caution on SOL?
Well, SOL is generally moving with the market, but the signals are a bit mixed. There was let's say, a bearish-looking candlestick pattern last month, according to the source. It suggests there might still be some selling pressure lurking that hasn't fully resolved.
So conflicting signs.
Exactly. The key levels are pretty tightly defined. Upside momentum really only kicks in above $250. But if it gets pushed below the $200 zone, that could signal sellers are back in control pretty quickly. It's just, a bit more contentious right now than the others.
Okay, so wrapping this up, the overall picture from Vantage Plus seems technically quite positive. We've got this bull run attempt underway, but its continuation seems really tied to that macro piece, specifically whether the U.S. jobless data comes in weak enough to push the Fed towards more rate cuts, more liquidity. Is that a fair summary?
That's pretty much it. The technicals are setting the stage, but the macro, especially the Fed's reaction function, is likely the trigger for the next major leg up. And maybe a final thought here for you to chew on this week. We saw that massive $3.2 billion flow into BTC ETFs last week. What happens if that kind of institutional money starts shifting its focus, if it starts rotating more heavily out of Bitcoin and into the larger altcoins like ETH? How much higher could those, say, $7,000, $8,000 ETH targets realistically go? That potential rotation, that could be the next big narrative to watch.
Interesting point. That potential shift from BTC dominance to broader altcoin participation fueled by institutional cash, definitely something for you, the listener, to track alongside those key levels. Okay, that's our deep dive based on today's Vantage Plus analysis. Thanks for joining us.